You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome to the show, Tim.
Jim, thanks for having me again.
Your newsletter has come out with a very interesting article, and it looks like our equity markets are building a house of cards, and I think the cards are getting thinner and thinner by the day.
Well, Jim, the house of cards has been building for quite some time, in fact. And you know, I'll be the first to admit I'm totally surprised at how many cards they piled on the house of cards. But it hasn't changed the fact that it's a house of cards. I know that sounds like a broken record, but, you know, it is what it is. And, you know, I said when we started out of the '09 low that it was should be a counter trend rally. Didn't expect it to go to a new high, and that it was occurring within the context of a secular bear market. That hasn't changed. I believe that. You can hold a gun in my head. You're not going to make me change my mind on that. I mean, I know. I mean, I'm looking at it. You know, the volume stuff that you know, the last article we did talking about the volume and tying it into job participation and some of the underlying stuff with the economy with M2 and so forth. I think that was titled Deflation. It's on your site. And so all that tells us that it definitely is has occurred within the context of a secular bear market. I believe that 100%. The issue is that, you know, we have seen absolutely unprecedented manipulation to keep this thing up and going. And, you know, I said when the rally out of the '09 low began that it would go up until we got the setup to cap it. And we saw nothing until 2014. And in 2014, we started seeing some cracks, structural cracks. You know, we'd see a setup. A setup, let me explain something first. A setup is an opportunity for a top and for it to further evolve into a higher degree setup. Well, we would see the lowest degree setup. Every little cycle up since July has been an issue. Every one of them got in trouble. And we saw, you know, cracks structurally. But then what is amazing is that if you go back and look at them, and I need to go back and find the news events and label it on the charts versus where it was with the cycle. What we're also seeing is every time one of those cycles was set up in the how do I say this? The lowest level setup would try to mature or start to evolve into something more meaningful. We see news events. You know, was it the Alibaba IPO right at the critical point? Okay, that one maybe a little iffy. But then you see back in October, the market was absolutely the Nikkei had fallen apart. It was over the ledge. The other markets, the U.S. markets, were set up. We had to decline into the October low. We had bounced. It was starting. And here comes the Bank of Japan announcement. And then in December, I don't remember, there was a speech at some Philadelphia Fed governor said something positive and at another critical point. And then there's the European Central Bank. They come out and they do their thing. And then the next day the market tries to roll over a little more and they say, oh, well, we'll do more. You know, and so what we're seeing at this point is blatant manipulation with the news. Now, that's not an excuse for the reason that the market has held on like it has. I mean, it's just a fact. I mean, you don't get to you know, we're not dealing with the longest 4-year cycle in stock market history for no reason. I mean, there's a reason we're here, and it's because of the obvious efforts to reinflate and to fight deflation. Deflation is the enemy of the Fed. That's what they're trying to stop. And those are the forces, the very actions that they have been taking since the 2000 top and in an increasingly, I want to say, I don't know, desperate is the word that comes to mind, way, is proof that this market, if someone will stop and think, is proof of just how dangerous this market is and what they are fighting. And so I said all that to say this. This doesn't negate the cycles in any way. The cycles, they come and go, they ebb and flow, and you see a setup, and it just, so far nothing has stuck, if you will. We'll see a crack, and it just hasn't quite evolved. Well, like I said, every little short-term cycle since July has led to a crack. And, do we see another crack here now? Does it happen with this setup that short-term cycle right now? Or is it 5 or 10 cycles down the road? Can it go on another year? I don't know. But what I do know is that when we see it, one, it can't go on forever. Two, the longer it stretches, and that's a statistical fact, the worse the decline is going to be, because there's that reversion to the mean, if you will. And it's also a historical fact that every bear market, or the 4-year cycle decline in every bear market since the inception of the industrials in 1896 has moved below the previous 4-year cycle low. So there's a very, very, very negative statistic. And so eventually, one of these little cycles, and I don't know which one it's going to be, it could be this one. Like I said, it could be 10 cycles down the road, 10 of these little shorter term cycles. I don't know. But eventually one of them's it's not going to be able to be manipulated or away, if you will, with news or intervention or whatever. There is a limit. There is a limit. I don't know what that limit is, but we will know looking at the cycles structurally. Once it sets up and the setup is confirmed, then we know. We know what we have. So the cycle stuff, while it is extended, the market still ebbs and flows. And so we're just dealing with a very, very extended, as you say, house of cards. And I promise you, it's coming down in a big way.
Tim, what will be the warning signs it's about to collapse?
I don't know that there will be any. Markets, the funny thing, back in 2000, let me give you an example. In 2000, we didn't have the manipulation going on that we have now with the news. With the news and with the intervention and that sort of thing. We'd never even heard of QE. The market set up, when I say set up, I'm talking about a structural signature with the cycle. It's all about structure of the market, order. And you look at a chart, there is order there. People don't see that, but when you look at the cycles, there's an order to it and rules. And it means something. And so when you dissect that, then it has a meaning. It has the signature of it. It tells you something. It's just I guess it's no different than someone reading a radar scope. To me it looks like a bunch of gobbledygook on a screen, but to a radar technician it means something. They can read it. And so back in 2000 we had the setup structurally. I called the top. And it was published in Technical Analysis of Stocks and Commodities magazine, and the setup just sat there. The market just, in that particular case, every top is different, but in that particular case, the setup occurred, it was confirmed, I made the call publicly, and the market just flatlined for basically a year. We eventually go down into the 2001 low. 9/11 occurred along the way, and I said then, based on the DNA markers and timing and the timing bands of the cycles and so forth, said no, there's another push down, and then we got the 4-year cycle low in 2002, as we should have, based on all the other statistics and DNA markers and so forth. And so what I'm saying is that when that top occurred, there was no news. The skeletons come out of the closet after the decline begins. The same thing with 2007. I remember in August of 2007 standing at a computer store and getting phone call after phone call after phone call because the market had started to decline out of the July top into an August bottom. And it wasn't, we were looking for a top. At that time we were dealing with the longest extension of a 4-year cycle ever because, intervention had become such an issue at that point in trying to keep this thing going. And people were looking for the top. My subscribers were looking for the top. The phone's ringing off the hook. Is this it? And I said, no, we need one more push. This is an intermediate decline. We need one more push to set it up. It set up in October and it was done. The first setup. That time it sank immediately. It didn't top with news. There was nothing. Nothing of any significance. And then look what happened after the cycle started. All the skeletons came out of the closet after you get over the curve. This time is going to be the same. It always is. It's going to quietly set up. Everybody's going to think everything's okay. After it goes over the ledge, who knows what the skeletons are this time? They will be far worse, I think, than anything we saw into the 2008 and 9 period, into the 2009 low, because it's been extended so much. It's a bigger house of cards. And so, no, I don't look for any kind of significant news. I mean, maybe now. I guess one exception may be if something catastrophic happened with a top being due. If some kind of catastrophic event happened, then maybe we do get news with it this time. I could see that. But as a rule, I expect it to set up, and then the skeletons come out of the closet once it starts to melt and people realize what's going on.
Will there be a lot of finger pointing?
I think there is going to be massive finger pointing. I mean, just like last time. But I believe that, or I have to believe that it'll all come out in the end eventually, and maybe even the powers that be take heat for creating the house of cards. Maybe not. I don't know. But yes, there's always finger pointing, and I think there will be finger pointing. I think the truth will eventually come out on this one.
We'll have more with Tim Cyclesman Wood right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Tim, what are the cycles telling you about the price of oil? It's back on the way up, and they've certainly been quick to add that extra price at the pumps. What's going to happen?
It's an intermediate degree low. We were, actually looking for a bounce, and with the cycles, it did develop. It is moving higher. And now I know this doesn't sound like an answer, but the answer is it's going to continue up until we get to set up to cap the intermediate degree bounce. And you say, well, what's that setup? Well, it's a structural thing, and that's what we watch. That's what we monitor. And so, it's going to go up until we get that set up, and then it's over. Now, that said, how long do I think it's going to go up? Well, I don't know the answer to that again until we get the setup. But let me say this. In a normal environment, there tends to be lows this time of year, December, January, February, and there tends to be a seasonality thing where you have, higher prices into the driving season, the summer driving season, into May, June, July type thing. So, in addition to the intermediate degree cycle lows, we have the seasonality thing. And so, there it is a seasonally bullish period as well as a cyclically bullish period, is what I'm saying. Now, how strong is the prevailing downtrend? I think the longer term direction is still down. Do we rally into June or July? Do we rally, into next week? Again, it's a structural thing. You go down the road till you see the sign. And so I could see it lasting a few weeks. I could see it lasting a few months. It's the setup, which we will know when we see it. Once the rally has run its course, the longer-term work suggests that oil does resume to the downside, and I think it moves much lower.
I know you suggested $30 oil, perhaps $20?
I think it could go by the numbers. It could go below 30, yes. And that's just based on simple math. There are some relationships that I look at, dollar oil relationships, and I put that detail is in a couple of letters ago, I believe, Jim. But yes, absolutely. And so if you just go to that, if we just return to that norm, then it takes us to, I believe it's like $28 or $30. But typically what you see is you overshoot the norm. It's like a moving average. You're always chasing it. It'll move way above the norm and then way below the norm. Well, we've been way below the norm for years. I mean, for 10 years. And what happens, this is another good topic. What happens when you move way above a norm or way below a norm and you stay there long enough, then people accept that as a new norm. It begins to feel normal, and they become dependent on it even. And an example of that is that the norm, the dollar oil relationship norm that I'm talking about, I mean, it was at such a low level for, like I said, 10 years with the price of oil so high that it just become totally acceptable. And to think then that it could return, that there would be a revision to that mean, if you will, or even overshoot that mean and take oil back to $30 sounds crazy. Absolutely crazy. But if you look back in time, it oscillates back and forth, and this has been an extreme abnormality. And it's the same way with the stock market. You know, people think, well, the Fed's got our back, everything's fine, they're not going to let this go down. No, they're not intentionally. I think, you know, obviously trying to hold it up, but people accept these extremes as a new norm, and this isn't a new norm. This is a freaking disaster.
The central banks in Europe now have negative interest rates, and their reason for it, they said, is they don't want people to hoard money. In other words, saving money, they don't want you to do that at all.
Exactly. All of a sudden, that's been a bad thing. Do you remember years ago when they talked about different countries? I remember this vaguely in the news as I was much younger, but they talked about the savings rate of one country versus another country, and we had to, you know, so-and-so got the lowest savings rate, and all, because saving money was a good thing. It was a prudent thing. And so if you just look at those actions, all people have to do is I mean, think. I don't care what somebody says. Look at their actions. The actions is what tells you the truth. And so the actions of that tells me they want to force the money into the market. Why? Because they know it's a house of cards. They're trying to keep it up. The actions tell you how dangerous this market is. It's insanity.
Well, I just had a comment saying, are these central bankers insane, or are they just fanatics?
You know, I don't think they're insane. I think they're probably doing what they think they have to do. Like the old line, people, you know, well, I'm just doing my job. I think they're just doing their job. I don't know that they're bad guys. I'm not saying they're a bunch of lunatics or evil people or anything like that. They're trying to do their job. They do what they do. And I think that maybe they think that they can overcome, or maybe they're hopeful or wishful that they can overcome these natural cyclical forces. But as a cycles person, I'm going to say no, they can't. It's ultimately a losing battle. Now, they've done one hell of a job at extending it, and which I think has ultimately made it worse. But no, I don't literally think they're crazy. I think they're very, very smart individuals. I mean, look what they've done. They played this very well, and so they're not idiots. They know exactly what they're doing in that regard. But I don't think they can win the battle. I think nature has to take its course.
And as you said, cycles are part of nature.
They are part of nature. And another common sense thing, you know, stand back and look at, all people, you know, have to do is stand back and look at this thing with some common sense and think about something else. You know, has there ever been a time in history that any market has been manipulated indefinitely? It doesn't work. And all you have to ask yourself is, I mean, is this manipulation with the news and manipulation with QE and manipulation with the Bank of Japan doing their thing, and the coordinated effort between the central banks and like you said, negative savings interest rates and all this, is that not a coordinated effort to manipulate the market? And then ask yourself the question, why is this happening? Not because the economy's so good, because the market is on edge. Again, it's a house of cards. And like I said, they've done a fabulous job at extending, you know, I mean, my hat's off to them. I never thought this would happen like that. But it has, and what I'm saying is, it's going to set up one day. I don't know if it's today. I don't know if it's next week. I don't know if it's 6 months. I don't know if they can extend it another 2 years. But the cycles, the structure, it will set up, and when it does, it is checkmate, and it's going to be one sight to see. And look, let me say this. I don't want to always be on here and talk gloom and doom, and people think that it's just negative, negative, negative. He's a perma bear, he's a perma bear, he's a perma bear. No, I'm not. I know what we're dealing with. I use these methods, and I'm not saying this to brag. I'm using these methods to try to, I guess, make people think and realize that, I'm not just trying to be some contrary idiot out there talking on the air. I called the 2000 top. It's in print in a magazine. The 2007 top, it's in print. The housing top, the top in gold, the bottom in the dollar. You know that. You've been following the letter. And these are real. These are calls. This is real. They were anticipated. They were called. It was documented. And I'm telling you, the same methods tell me what they tell me about this market here. It is what it is. And so the other point I want to make about that is that, people perceive, a declining market as a negative thing. Well, I see it as a good thing because it'll purge the system. The system needs to be purged, and then, you can start from a fresh foundation. It's a historical fact that every secular bear market has historically been about a third the duration of the preceding bull market, going back to 1896. Well, when you get that purge, it gives you a foundation in which a new economy can be built on, a new secular bull market. It's part of the cycle. It's like night and day. You can't have night if you never have day. You have to have one. You know what I'm saying? It's a cycle. It takes both. And so if they had left it alone from the 2000 top, it should have been over around that 2009-10 period. But what they've done is they've extended and made matters worse, and okay, it is what it is. So eventually we'll get the purging, which is actually a good thing, because then a real economy, I think, can begin. That's what the cycle is about. It has to wash out. There's too big to fail stuff and the bailouts and all that. No, they need to go. That's part of the cycle. You purge the trash, flush the toilet, and then you can start with a new economy, and everything is fine. So in that respect, this is a good thing that needs to happen. And then the other side of that is you think about it, you kind of like, kids walking down a railroad track, throwing the rocks and skipping them in the ditch. It's not a negative thing that a train is coming blowing a whistle with the light on. Get off the track. The negative thing is to stand on the track and get run over by the train. And so what I'm saying is this isn't gloom and doom. It's information. It's factual, statistical, historical, documented, cyclical information. It's hardcore fact. And so don't look at it as negative. It just is. And so accept it for what it is and use the information. And if anyone wants the research or that details and to follow these setups as they try to occur, and eventually it will, then that's available with a subscription at Cycles News and Views at cyclesman.com.
Tim, thanks a lot for chatting with us.
Jim, thanks for having me.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.